Good day, everyone. This is your European Open briefing for Thursday, December 1st. My name is Michael Frentiades and I'm the Chief Economist here at xm.com. These are the key points you should know about today. Oil has jumped on OPEC's decision to cut output yesterday. The dollar has rallied versus the yen to reach a 9-month high as Treasury yields in the United States also rise. Chinese PMIs come in better than expected, and this reduces concerns about the Chinese economy. And on the calendar today, we have UK manufacturing PMI, Eurozone unemployment, US ISM manufacturing. These are the main numbers, and we will have a couple of Fed speakers, Mrs. Mester and Mr. Kaplan. So look at oil. We see that over a 2-day period, it has rallied more than 10% from a sub $45 a barrel level to top $50 a barrel. What OPEC has decided was to cut output by 1.2 million barrels. This is OPEC's cut, and this will be accompanied by a 0.6 million barrels cut from non-OPEC members such as Russia. This cut was much higher than anticipated, thus the reaction we see in the oil market. That cut goes into effect in January. Now, will it lift the supply glut? Will the cut actually be implemented as was decided? These are the interesting questions going forward, and this may be what kept oil from rising even further. So it should be very interesting to watch. Now, we had a powerful rally in Treasury yields. You see that on Tuesday we had around the level below 2.3%. The purple line is the 10-year Treasury yield, and it has rallied to almost 2.4%. And I like this chart because it shows the very strong influence that Treasury yields have, particularly on the dollar-yen rate. And we see dollar-yen rising from the sub 112 level to top 114. The high was 114.82. Now what happened basically there was that the oil deal has pushed up the oil price, of course, so this is helping inflation expectations. So together with some hopes about fiscal stimulus in the US, this has boosted Treasury yields, and now Treasury yields, at least in the 10-year and in the 30-year, very close to their recent highs. So it will be very interesting to watch there also if yields, higher yields continue to power the dollar higher. The dollar not as strong versus the euro and the pound, so I guess a lot of selling happened before there. Maybe they're pricing in, they have priced in some bad news already, so that's interesting observation. Moving on to China. Chinese PMIs, this is the services PMI in blue, this is the manufacturing PMI in yellow. They came in better than expected, so we see in recent months a rise in both the non-manufacturing and the manufacturing PMI. So this is good news for China. It looks like both sectors are doing well, so there is no visible threat yet from the Chinese economy. It's not slowing down, as many had feared, especially at the beginning of the year. So credit, expansion, yuan depreciation, construction works, rebalancing towards services seems to be working for now. And this, I will note, is also positive for commodities and demand for commodities. Chinese economy being particularly commodity hungry, and this in connection with the expected fiscal stimulus in the US, maybe some infrastructure spending by the new Trump administration. We'll see about that. On to today's data points, we had Australian capital expenditure missing expectations, mainly on the building slowdown. That was a rather disappointing. Building approvals yesterday as well. This is for the third quarter, but anyway, some slowdown happening there in the construction. We had the Chinese figures. We had the manufacturing PMI better than expected, as you can see here. Caixin manufacturing PMI final a little better than expected. We had a slight cool down in UK house growth, 4.4% from 4.6% expected, 4.6% previous year. The figures are for November. And I would also note that the Italian PMI beat expectations, 52.2, ahead of Sunday's referendum. So let's say political uncertainty certainly not hurting Italian manufacturing too much. On to the remainder of the day, we have Eurozone manufacturing final PMI expected to come in more or less unchanged with the flash estimate. We have the UK manufacturing PMI, crucial number for the UK economy. We have Eurozone unemployment, which is expected to stay around 10%. In the US, we have quite a few figures. Jobless claims, of course, around 253, 251,000 the previous week was what was announced. We will have market final manufacturing PMI, construction spending expected to lift, and manufacturing PMI, ISM PMI for November expected to rise a little bit compared to the October number. So some interesting figures out of the US as well, especially jobless claims and ISM. So we will get a couple of Fed speakers, Mester and Kaplan. So that's all from me today. Thank you very much for watching and have a great day.